When I started trading crypto back in 2017, I thought it would be easy. Well, was I wrong? It's been a crazy up and down market. I've learned a ton over the last 8 years, but the truth is that I could sum it all down to just 3 ways that you can start becoming a better crypto trader today. And that's what we're going to be talking about in this video here on More Coin Bureau. The first tip I have for you, stick to your trading plan. I cannot tell you how many times I abandoned the potential of life-changing profits because I took profit too early because I was afraid of what was happening in the market. Or I decided, you know what, I don't really want to buy that coin. I don't care that everyone's talking about it. It's not going to be a good coin for me. And then I give in to FOMO and then the price goes down, right? I'm sure this resonates with a lot of you. The reality is that your trading plan, the idea that you have for why you want to buy, is central to understanding how to be a good crypto trader. Too many of you are insane when it comes to crypto trading. You look at the market, you are instantly driven by your emotions, and you make the same mistakes over and over, thinking that this time is going to be different. Where Albert Einstein said it best, insanity is doing the same thing over and over, expecting different results. The truth about having a trading plan does not mean it has to be some crazy 10-point trading plan. It literally all comes down to this right here. Having a trading plan means that you are trying to figure out where you're going to buy, how much you're going to buy, and if it doesn't go in your direction, where are you going to sell? And when the market does what it does, then you're going to stick to that plan. For instance, right now, the price of Bitcoin is hovering around $117,000. I have a trading plan that I'm going to buy right here when the price hits this green line. And when it does, I'm not going to take profit here at 4%. I have a much higher target. So I want to aim for a target of $140,000. But let's say that I'm wrong and the price goes against me. So I'm going to have a stop loss just below this level. So this means that I have a take profit target at 21%, and I'm willing to risk my position and lose 5%, giving me a risk to reward ratio over 3. This is key. A lot of people end up trading with really, really tight stops, and they blame stop losses for the reason why they're not successful. Other people have insanely wide stops where they're basically looking at a 1-to-1 ratio. Now, you could, I guess, potentially have a stop loss all the way down here at $90,000, which probably won't be hit. But what if it does? Are you really wanting to risk a 21% loss? We're not even talking about leverage at this point. The main thing is that whatever you decide to do, stick to it. But I will say that it really helps to have a risk to reward ratio at least at 3 or higher. The second thing I want to share with you is to take partial profits. How many times, guys and gals, how many times did you take a screenshot instead of taking profits? I've been there too. Again, I'm not trying to make anyone feel bad. I have made this mistake too many times where I'm really excited about a position that I've held for, a day, a week, a month, a year, and now it's finally going in massive profit. But instead of selling some, I decide to gloat and brag online to say, hey, check out this screenshot of my profits that I haven't realized. There's a huge difference between unrealized and realized profits. And that big defining factor is that once the market goes against you, whether you're shorting or going long, if you haven't realized any profits, you've literally round-tripped your gains. You don't have anything to show for it. You have a really pretty picture, but you could say the same thing about all those pretty NFTs from back in 2020 and 2021. Am I right? The important thing is to understand that if you don't take profits, it's not profit. I don't care how incredible the position looks. If you're not selling any, you haven't made any money. You're looking at unrealized gains, and there is a substantial difference between unrealized profit and realized profit. I want to show you with the chart for Ethereum, just for the sake of an example. Let's say for the chart of Ethereum that you entered way back over here before Ethereum started to break out, and you are extremely pleased with yourself being up 40%, and you have 0 plans on selling. Well, maybe that's part of your trading plan. Maybe your trading plan is you took an entry here, and you have a super duper high take profit target, maybe up to like 100%, which is not unreasonable in this market, and your stop loss is down here. Cool, your risk reward ratio is 3%. But who's to say that it's going to be a straight line up? Sometimes we have really amazing rallies like this. Sometimes we also have rallies that all of a sudden get shortchanged, like this. Maybe we have a really, really nice move and we're feeling really cocky and really confident because we're almost going to hit our take profit target here at 60%. And we entered back here in May. And we watch the position, and then we see the price going up more and more. We haven't hit our take profit target, but oh man, we're so close. So we're sharing profits, we're super pumped, and then the market has a pullback. Now, this is where a lot of people make a major mistake. You subvert your trading plan. You decide to sell your position here instead of waiting. You sell not at 62%, but you sell here at 20%, sacrificing 40% just to feel good, only to see the chart rocket up higher. I laugh because this has happened to me, and I know it's happened to you guys many times over. The truth is that waiting for your take profit target, understanding that patience pays, it really does pay off, but it takes conviction and sticking to your trading plan. If you are going to be a crypto trader, you have to understand that you need to make good decisions that you are happy with. That means sticking to your trading plan, but it also means taking profits on the way up. Now, one method that you could use to take profits on the way up is to use partial profits. This is huge and extremely helpful in a bull market. Here's what I mean. We know, zooming out, for the price of Ethereum on the monthly time frame, yes, it has been chopping sideways, but there's a lot of upside potential where Ethereum could go to some astronomical number. Probably not this high, maybe about this high. So it would seem to be a shame for us to cut a position short at 60% or 90% profit or whatever it's going to be, because there's so much upside potential. But we also know that there's no guarantees of a price being hit, right? So what this means is that when we see the price of Ethereum reaching previous highs, it makes a whole lot of sense to consider taking out some profit at this range. Same thing goes for over here. There's nothing wrong with that. And to be honest, that happens all the time in crypto. A lot of people have these pie in the sky targets. And when we finally get to some extremely strong historical resistance levels, literally where Ethereum is right now, a lot of people freak out, abandon their trading plan instead of holding for a much bigger payout. So the trick to this is to take a little bit out. How much is up to you? I tend to take out clips between 20% to 30%, but again, it depends on you. Another thing you can do is you can break even on a trade. For instance, if I'm up 97, 100%, I could actually just exit the position 50%, and then I'm leaving my profits in the position. I actually have basically pure profit. I can just let the position ride. And of course, some of you will disagree. Some of you will say, well, no, don't sell because the potential target for Ethereum is going to be $1 million. Yes, it's going to go to $200 million, $10 million this cycle. While that might be true, the reality is that no one ever went broke taking a profit. And you definitely don't want to look like Voldemort shriveled up on the floor in whatever train station they're supposed to be in that movie. It really doesn't make sense, but it's okay. Now, the reality is that there are way more trading tips, tricks, tutorials, all that stuff on the Coin Bureau trading channel, of which I am a host. You can go to that. The link to subscribe is down below. And you guys know this, but there are amazing deals that Coin Bureau has negotiated on your behalf. Whether it's the Coin Bureau Club, which features insights from Dan, Guy, and Nick. There's also a lot of alpha that's shared there. And there's also a 10% off discount for our course at thebettertraders.com, 15 Minutes to Financial Freedom, which is an incredible course that covers essentially what I'm sharing with you, but goes way deeper, comes with coaching, comes with automated trading strategies, all that fun stuff. Now, one thing that I can share that I do share in the course, which is going to be extremely helpful and relevant right now, is this. This is where we are, okay? This is the key to the crypto kingdom. If you can understand the cyclical nature of cryptocurrency markets, you beat the system. You're ahead of 99% of the crowd. The problem that many people have with this, though, is some people are always, not always, but some people tend to be too early. Yes, we could be thinking right now, Ethereum pulling back, Bitcoin pulling back. Oh no, it's so over. Oh no, oh no. And then all of a sudden, things start to rally and we're so back. And everyone's feeling really good until we get some sort of a pullback, a little bit of a hitch in the road, some bad news, some political figure says something, the dollar does something, whatever, there's another war, God forbid. And then we go to it's so over. And then we transition back to we're so back. This is the nature of crypto. It's extremely cyclical. It's extremely emotionally driven, and it's very much fueled by FOMO on both sides. Well, actually, FOMO and fear, or FUD, really. So when we experience max euphoria, just keep that in mind. When everyone is bull posting, when everyone is posting screenshots of their profits, everyone is excited, there's way more activity, everyone is just euphoric. Pay attention. Now, this does not mean immediately sell your backs. It does not mean that, but it means that your spidey sense should be tingling. You should be aware of what's happening in the market. Now, flip the script. When things were super duper bearish back in April of 2025 of this year, everyone wanted to give up. Everyone was depressed about Bitcoin going lower and lower and lower, and people thought it's so over. There's no way we're coming back from this. All the Trump tariff news, it was so terrible. There's no way we're going to recover. That's it. Pack up your bags. Might as well just start a gaming channel, right? What happened? Well, we reversed and went all the way back up. Crypto is a cyclical market that is highly emotionally driven, and it is extremely volatile. We can use this to our benefit, and we should. When we put all three of these things together, when we remember that crypto is a very cyclical market, that we need to make sure that we are taking profits before we take screenshots, that we need to stay with our trading plan. We need to stick to our trading plan so that way we can make sure that we are going to walk away with the profits that we planned on. And even if we get stopped out, we just move on. If you can do these three things, you can actually be a really good crypto trader. Now, there again are way more videos, tips, tricks, playlists, all that fun stuff on the Coin Bureau Trading channel. I highly recommend you to go over there, subscribe. You can watch other videos by me and my co-host Dan. And I want you to watch this video that's going to pop up right here to give you a good idea of where we are in the crypto market and where I think we're going next. And until the next time, you know what to do. Stay awesome and stay in the green. Peace.